Hi, everyone. My name's Adam Perlow. I'm from Zen Protocol. Wow, never been in front of such a big crowd before. Seems like there's a few thousand people here or something. Anyways, so yeah. Today, I'm going to be talking about the centralized financial system. But before that, I want to talk a bit about myself. So personally, I've been in the space in Bitcoin since around 2011. And the thing that attracted me to Bitcoin wasn't the blockchain or the technological properties of it. Rather, it was the fact that I saw the potential in it to be a social kind of revolution. Because for millennia, we've essentially always used sound money, so gold-backed money in some form or another. And then in the past 100 years, since FDR in the 30s and Nixon in the 70s, we've moved away from that gold standard. And essentially, Bitcoin was an opportunity by which we could then, go back to how we naturally were. So I guess what I'm saying is there's been this outlier event in humanity, and now with Bitcoin, we had the opportunity to return to it. And so when I got involved in Bitcoin, essentially my assumptions were, one, that people wanted sound money. Two, prior to Bitcoin, they didn't have the opportunity to, have sound money, and that now Bitcoin would enable that. And to me, it seems totally insane that we wouldn't go back to using Bitcoin as gold. And in the same way, I think that the way we currently exist with our assets today is totally insane. I think that we today live in a world where, for centuries, for millennia, we had direct ownership of our physical assets. So your gold, your stocks, your bonds, your cash, whatever, was held directly in your pocket. And over the last century, essentially, we've entered a situation where, due to digitalization, we've rendered control of our assets to a third party. And we need this third party to now act as an owner of these assets, a custodian of them on our behalf, because we lack the technology to own them ourselves. So essentially, when you're moving assets from the physical world to the digital world, they have to sit in a database. And if you look at the current database technologies that existed prior to Bitcoin and the blockchain, I think there's two primary properties that we care about. The first is, who's managing the database? Is it managed by an individual or a group of authorized individuals, or is it just an open database? And the second thing is, does the database care about synchronization? Does it care about the sequence in which events occur? And the sequence in which events occur is very important when you're dealing with something like money, where you wouldn't want a situation where I'm sending money both to Alice and to Bob. So it's important, the order in which those events occur. I also think this is a good highlight to say because, I hear a lot of people getting into blockchain now. They're saying, oh, what's a blockchain good for? It's going to enable all these different kind of things. I think it's really only going to enable use cases where it previously wasn't possible because we needed the ordering, the chronological mechanism. So some examples of, let's say, managed databases where the order of transactions matters is a bank, right? Or Ripple. People in the cryptocurrency community, I guess, know, where essentially, you have one person managing the database or a group of people managing the database, and there's sequentialism in the database. Another kind of private database that, a managed database we're all aware of and we know about is, let's say, Netflix, right? Netflix, they have servers, and, those servers have all their different content, their different movies, videos, but not necessarily each server of Netflix holds the same videos. And Netflix doesn't necessarily know if I started to download this video or if I started to watch this video before you did. Now, this kind of, let's say, database which doesn't have chronological order, we also know as we have a public version of that, which is torrents. Or maybe in this space also, what people know as IOTA. So torrents are a public database. Anyone can use it. Anyone can access it. There's no one who can censor it, et cetera, et cetera. But the problem is that they don't have an order. And now we have the blockchain, or Bitcoin, which is it's essentially a torrent network, which allows us to determine what events happen first. Now, I guess my inherent premise is saying that now that we have the ability to publicly, without having to rely on a third party, to tell us the order in which transactions happened. Now that we have that ability to determine that order ourselves, why would we ever be willing to render control of all of our financial wealth all of our essentially property to third-party custodians. And I think that the thing that this is going to fall on whether we essentially move to a new sort of financial system is how big the pain is, right? Because now there's a situation where you could have a new system, but will it happen? And to answer that question is essentially, let's look at what the problems with the current system is. So one big problem with the current financial system, or the reliance on custodians, is the fact that they restrict access. So the people who can access the system are limited. For example, I have a cryptocurrency business in Israel, and right now it's very hard for us to get a bank account. Why? Because the banks don't want to give us service. We can't go about our business. It's not like I need any services from the bank particularly. I don't want a loan from them or anything. I just want to be able to, to hold digital money, but they're giving me a hard time. And the other problem is that they limit what I can have access to. So for example, let's say that I have a stockbroker, and that stockbroker allows me to buy stocks or bonds, but I can't buy an option, or I can't buy an interest rate swap. So these guys act as gatekeepers and don't allow us to, hold what we would want to hold. Another problem with the reliance on these custodians is that they get to extract this rent-seeking status. So they can charge us whatever kind of fees they want, and there's not much we can do about it. And they have no real incentive to make our lives easier, right? Because we're like a captive market. We're captive consumers. And if you're not familiar with the term, it's kind of like how you are at the DMV, right? It's like there's nothing you can do about it, so you just have to deal with it. So that's where we currently are. Now, what we're saying is that these problems are so big that it's inevitable that people are going to move away from the current system and go to a system where they take back control of their assets, which is what we're offering, Zen Protocol, a decentralized financial system. Some of the benefits of using Zen. You get direct control over your digital property. So you can send $1 million, $1 trillion, whatever. There's no one that can stop you. There's no one that can say, why are you sending it? Are you complying with this law or that law? It's just very easy and frictionless. Anyone can gain access to the system. Another big thing is it's very easy to build financial applications in financial businesses and financial instruments. So let's say that today the only people that can be players in the financial industry are people like Goldman Sachs, JP Morgan, people who have the capital that they can deal with all this regulation. But with us, what we're trying to do is we're trying to offer a platform where anyone can go ahead and build a new kind of business that brings value. I kind of see it like a new wave of startups. So let me give you an example. So Vinex is one of the first people building on our protocol. And what they're doing is essentially they're saying, listen, there's this kind of situation right now where you have a lot of boutique vineyards, and these boutique vineyards have an issue with cash flow. So what they do, they cut the grapes, mash it up, and they have to wait 3 years until the wine is ready to be sold. And it's very hard to provide themselves with financial capital in the process. And so how do they want to go about solving this problem? Well, they want to allow people to go and buy the wine ahead of time, 3 years ahead of time, and get a big discount. So the consumers get wine at a discount, and the producers get financial security. And this used to go on, let's say, 10, 20 years ago. You had this kind of model. The twist here is, the benefit is that these consumers can then sell their right to receive wine. So it's essentially like a forward contract on wine. It's a real use case. Both parties benefit, and I actually think it has a good potential to succeed. By the way, I'd be happy for you to get more info about them. They're quite experienced guys at the Vinex.network. Quite bullish on the project. Okay. Now, we've been talking about the fact that we have these kind of a platform to build financial applications. But the way we go about that is we didn't, take blockchain technology or fork Bitcoin or fork Ethereum. Rather, what we did is we built a protocol from the ground up to provide infrastructure for these kind of financial use cases. So what are the prerequisites that you would need for, a protocol to be adaptive and competitive with the current banking system? If you look at, let's say, Bitcoin, right, it has support for a single token. And the conditions under which you can lock that token are relatively simple. And if you look at something like Ethereum, it's a very generalized platform for any sort of decentralized application. What we're saying is we're going to be custom focused on finance, and one of the first things we obviously need is multi-tokens. What does multi-token support at the protocol level give you? I'll give you an example of, let's say you want to write, let's say, a contract, let's call it the S&P 500 contract, where if you deliver an S&P 500 token to the contract would then release, let's say, 500 stock tokens to you. If you look at any sort of virtual machine paradigm trying to do this, well, what would happen in, let's say, Ethereum, you'd have to call 500 different contracts, update the state of each different ERC20 contract. It would be a problem. It wouldn't really work out well. With us, it's just simple one transaction. It's two outputs, essentially. Next thing that's essentially a bit differentiating about us is how we do our smart contracts. So maybe I mentioned this before, maybe I didn't, but essentially we don't have a virtual machine. We're a smart contract platform without a virtual machine. How do we do that? The way we do that is we look at each contract as its own decentralized escrow mechanism, which is isolated from the rest of the system. And the reason that we're able to do this is because essentially each contract proves ahead of time how much resources it consumes. And by being able to prove how much computation it's going to take to execute a contract, you can get rid of the necessity for a gas system. And once you get rid of the gas system, you get rid of the virtual machine, which means you can run at bare metal speeds, and it results in a system that's a lot faster and a lot more secure. So if we don't have a virtual machine, where do these contracts essentially live? Well, they live in what we call the active contract set. And the active contract set can be thought of as the RAM of miners. So each miner has to store contracts. They have to know the terms and conditions that were agreed in the contract between two parties so that they can judge correctly in the event that the contract is disputed. They have to obviously be aware of the terms, and to be aware of the terms, the contract needs to sit in their memory, in the active contract set. And the last I guess, highlight of the protocol that we've built is what we call multi-hash mining. So essentially, it may not be viable to have a situation where we're running our financial system on a protocol where all of a sudden there's fights and forks and that kind of thing. So what we went ahead and we did is we said to find a block, to advance a blockchain, we're going to have, let's say, just for example, two hashing algorithms, SHA-2 like Bitcoin, and let's say SHA-3 like what you have on your normal CPU. And for example, let's say initially half the blocks are going to be found with SHA-2 and half the blocks are going to be with SHA-3. And then if you have a situation like we had here with Bitcoin and Bitcoin Cash, where the users weren't happy with the miners, et cetera, they can just take their coins and vote to say, you know what, instead of it being 50-50 now, we'll do 80-20. So 80% of the blocks will be found by SHA-3, and 20% would be found by SHA-2. And this is essentially a way to resolve disputes in the platform. Now, we don't only view ourselves just as a protocol level. We're like a full software as a service kit for anyone who wants to go and build the next wave of finance. So one of the things you actually need in order for this platform to be useful is you need contracts to be able to operate on external events. And so we have built-in oracles for that purpose. Another thing you need is you don't want to have people programming. So what we're doing is we're providing a standard contract library out of the box, ready to go. All you do is you insert some parameters and you create a contract with these. It's like a one-click contract engine. Think of it like a Wix for finance or something. Another thing we have is cross-platform wallets. So essentially, instead of having a different wallet on your desktop and a different wallet on the web and a different wallet on your cell phone and a different one on your hardware wallet, what we want to do is have a good consumer experience across the board, same kind of user interface, just like you would with your UBS bank or something. And the last thing is that we're offering basic infrastructure. So we have APIs and SDKs that make it very, very easy from the get-go to do specific things. For example, like issue whatever it is, like a dividend or something like that. So a bit about our company, quickly. So we already have working software. Go to alpha.zenprotocol.com to see it. We've been working on this for the past year and a half. Already have some capital. We're a team of about 10 people in Israel, quite experienced from the industry. Launching our mainnet in April. We want to invite you guys to come work with us. If you think it's relevant, go to our blog to see the open positions we have, blog.zenprotocol.com. Please come and build on us. Send us an email to info@zenprotocol.com. And join our community, Telegram and Twitter. Thank you very much. Have a nice day. I appreciate it.